Hi there, I'm Darren McDermott and you're watching The Week Ahead. Today I'm joined by Sebastien Galy from Societe Generale in New York to find out what he expects to see from the markets this week. So Sebastien, let's begin with the UK as the sterling rose today to its highest level in 5 years against the greenback. Now Sebastien, this rise comes after Carney warned last week that UK interest rates could actually increase sooner than expected. So what sort of performance are you expecting from the dollar? Do you think it will continue to move higher?
I think it's in the face of I would say a bit of consolidation. So if you look at RSI, at least on the euro sterling, you'll see that of course it looks like it's oversold, but less so on a weekly basis. And overall, what you're seeing is that the market is kind of desperate for yield wherever it can get it. If you look, for example, at the portfolio data, which came out of Canada, it indicated, for example, there was a significant amount of repositioning in money markets. And that's really a trend that you're seeing globally, is within money markets, people are desperate to catch yield somewhere, and the few places where they can catch it, from Australia, New Zealand to the UK now, they will actually go for it. So that suggests that if we do get a consolidation in sterling, it'll be a fairly short-term one, and people will actually build up their sterling position. They might look like they're important just looking at CFTC data, but they're actually very weak if you look, for example, at foreign reserve positioning and overall positioning in sterling. So it will be one of the nice trends. I think on euro sterling side, when you start to head towards the 0.78, you're roughly at medium-term fair value for euro sterling. And typically what you see is a currency which starts to yield something and is cheap, which is the case for sterling versus euro. It typically does quite well. So it's more of a medium-term trend which is starting to build in sterling, which has been building for a while, and it's just being confirmed right now.
And moving over to the US. Now, Sebastien, do you think there will be any surprises at the FOMC meeting this week? And what sort of reaction are you expecting to see from the US dollar?
I think the market is underpriced, even the Fed's response function. So that's going to be an interesting thing going forward. As we saw this search for yield, both particularly in the front of the curve extending from Europe to the US, that has led basically yields to be too low, essentially relative to what the Fed will eventually deliver, and we might get a bit of a surprise on that side and some form of repricing of the U.S. Treasury curve. The problem is it's really unclear which part is really driven by expectations and which part is driven by market forces in the sense of liquidity pressures. I would suspect it looks a little bit overdone on the Fed side, so we might get a bit of dollar strength. Just going ahead into the Fed meeting and a little bit of repricing at the very front end of the curve, helping the dollar to outperform. That is particularly interesting versus euro, because euro-dollar is of course driven by yield differentials. Yield differentials have fallen a lot, driven mainly by the euro side. If the U.S. side starts to move higher, that should help the euro-dollar to drive lower, and particularly we do expect that EONIA will fix negative on starting on tomorrow basically, and on Tuesday and going forward. And the main reason behind it is of course that the ECB actions are really going to start to kick in this week, because they physically, and just by the way they set up their decision, it actually means that it starts on Tuesday. So it's going to be an interesting event both on the euro and the dollar side. A little bit more volatility coming from both sides in the coming days.
We also have the S&P rate decision. Now, rates are expected to remain on hold. So, Sebastien, what sort of trading trends are you expecting for the Swiss franc?
The Swiss franc is driven by mostly by interest rate differentials, as well as some of the performance of dollar Swiss. So if we see dollar Swiss move a lot, typically some people will go long dollar, short Swiss. I think that's a fairly low probability event, but that would typically mean the euro Swiss moves a little bit higher. What's happening in the case of the S&P is that for now they don't have to shift monetary policy following the decision of the S&P. However, if rates really do go much more negative in the eurozone, then the S&P will be caught in a bit of a bind. So the S&P is probably hoping that as the Swiss franc is relatively pegged to the euro, that we see euro dollar move lower, and therefore that will ease also monetary conditions in Switzerland, because the broad Swiss franc essentially will be falling, and that may well be the case. So for now, they're probably crossing their fingers and hoping nobody pays too much attention to the euro Swiss franc, because they don't want to intervene in the FX market, and they probably won't have to. So that's, I guess, the good news. Nonetheless, on Tuesday, as we fix on the negative on the EONIA most probably, we might have some volatility coming through the euro Swiss franc as people reallocate some of their euro funds into other currencies, whether it's in the Swiss franc or out of the Swiss franc for that matter. And we don't really know what's going to happen precisely on that day. But the trend is probably just a consolidation on the lower level in euro Swiss franc, particularly as equity markets don't seem to be doing very well. So that typically gives a bit to the Swiss franc.
And Sebastien, before I let you go, what other events will you be closely watching?
Well, there's a couple of events. I think we have some RBA coming in very soon. In Canada, we have already had some of the basically portfolio data indicating significant amount of inflows. We have some BOJ minutes coming on June 18th, RBAs on June 17th as well as the UK CPI. So a bunch of events coming through, and some secondary data coming out of the US and Canadian CPI, which is very important on June the 20th. So a few data points in what will seem to be a market consolidating that's a long equity position, deeply overstretched and in need of consolidation at this point.
Sebastien, thank you very much. Well, viewers, do stay tuned. Do not go anywhere as you have plenty more heading your way. Goodbye for now.